This is our Forex blog for August 14th, 2012. And like we do most days, we start with our currency meter, which I'll bring up now. This shows you the real-time strength or weakness of each currency. And if you want, you can use our hot list or quote sheet to sort these and see the strongest ones on the top, the weakest ones on the bottom. This shows you the CAD, pound, and dollar are the strongest hourly trends. The weakest ones are the yen, New Zealand, Australian. And the real-time trend strengths on the top. Underneath that we have 15-minute trend, hourly, daily, weekly, monthly. Obviously, the more time frame trends that are up, the better and the more likely your trend is to continue. So you can see the CAD was very strong today. The pound had mostly strength, and the longer-term trend was up. The dollar really later in the day, the daily, weekly trend shifted pretty strong up. These are currencies you can be trading against: the weak yen, the weak New Zealand, and the weak Australian. After 9 o'clock, this really got extremely weak. So let's start with looking to buy the CAD yen. So step one of our system is, use the currency meter to identify the strongest ones. And our statistical real-time momentum tool uses 5 different tools. 3 of them show the percentage of CAD pairs going up or down with each statistical model we use, and the other 2 show the intensity. So let's bring up the CAD yen, and you can see this pretty much exploded up. And one of the things we're doing is trying to make trading even easier. And one way that we're doing that is putting in intensity-based color bars, and we also have the FX value areas. This looks at the previous week, the previous day, and it shows you where most trading activity happened. The center value areas, this orange one is the most actively traded price of the previous week, and it happens to be right over top of yesterday's most active price. And when price went above the upper value area of yesterday, the green and red is where yesterday spent 68% of its time. When it's above that, it's very likely to go up. And these levels are a lot of times many pips away from the previous day's high. When that gets broken, you tend to have continuation. And one of the other things that we're putting into the software, I like to use the blog post not just to show our existing software, but what we're planning on doing with it. And one of those shows you what the 4-hour value areas are. And above the center line, which in this case is white when it comes up, you tend to have explosive up moves. You can see a move right here. When it broke the value area of that previous 4-hour period, it exploded up. And when the market's up this much, usually it's going to pull back and reverse a little bit. And a lot of times these weekly and daily value areas, once they get broken, when you get a pullback, it's a very high probability place to buy. But you can see when it broke above yesterday's value area in the previous 4-hour period's most active price, this is where most traders had positions, right here at 79.04. So when it goes above there, there's typically some real momentum to the upside. And notice it spent a lot of time up here at the high. A lot of people were long here at the high. When it went underneath that level, it pulled back in 2 waves. Down, counter trend up, down, and you can see it didn't have that much statistical weakness at the time. The bars go green pretty much early into that next move, and the CAD yen isn't really the most volatile currency right now, but this is a huge 50 pip move up. And once the bars get a little bit less green, typically that's the end of the move. Let's go look at some of the other trades you could have had today. Again, the pound, relatively strong, weak yen, and this is another one that you could trade to the long side. Let me remove that one tool. This is still experimental right now. This is yesterday's most active price, 122.90. That's where most traders had positions. So above that level, it tends to go up. Below that level, it tends to go down. Yesterday's upper value area, which is usually a resistance area, this is where 68% of yesterday's trading activity happened, from this green level right here to the red level right here. Not much activity happened underneath that. Not much activity, in this case, probably not much at all, happened above that upper value area. So once that breaks that, it's likely to go up. And this is last week's upper value area. So last week spent the majority of its time between that thick green bar in the top and that thick red bar in the bottom. This is where the most active price of last week is. And notice yesterday how it acted as major resistance. Couldn't get above there the day before, Sunday, and Monday. And once it did, it trended up. So these are very critical for letting you know which direction to trade. And once you see a strong trend, there's a lot of ways to get in. You can just simply draw trend lines on decent sized pullbacks like that. Right here. A little pullback right here. This is not much. I probably wouldn't have taken that trade. In this one right here. The fact that it found support here, found support, exploded up. Another easy method to trade once you use our currency meter to identify the ones that you want to be in, simply use a moving average. And it's not just a regular moving average, just uses advanced digital signal processing code. Very, very fast. And by shifting it one bar to the right, we can get a very good entry method into the new trend. Let me scroll this over and let's take a look. Anytime you have a move up and a pullback, when it goes back above this displaced moving average, I'll get rid of all the trend lines now. You go long. So you made money here, made money, decent pullback here. You made a little bit. You probably made 4 pips. You got in this one right here, somewhere around 23. And if you use this to get out, you get out at 82. You made about 60 pips on that trade. And it's very easy for traders to trade. When you have that displaced moving average, that's very fast. And you also have another tool that we're working on, which basically shows the intensity right onto the candles. You get a pullback right here, the bar goes green, breaks that, you get in, and once you're in that trade and starts going dark green, this is one hell of a strong trend. It's very likely to continue. It starts losing its momentum up here at the high, and you can possibly even get out of the trade once it breaks that bar's low right here at 86 versus 81, catch an extra 5 pips. So that's what we're doing to make our systems as easy as possible. And I will get rid of the moving average on here and show again what the 4-hour point of control looks like. And this is something that we're going to possibly release as a separate tool as well. And basically it's the same thing as the daily and the weekly point of control, but for the previous 4 hours. And this works on very well on 4-hour bars, hourly bars, and even 30-minute bars. The previous 4-hour point of control where the most activity happened, starting today at midnight for the previous 4 hours, was right here, and it spent 68% of its time between the green and the red. And when it's above the white point of control, you want to look for buys. So when it broke out right here, you want to get in. You saw that pullback right here. And here's the point of control for the previous 4 hours. So when it went underneath there, it was up a lot. If you thought it was going to go down, you could have sold it there, and guess what? It went right back above it, so you go long, and it rode it up. Pulled back right here, and never really started to go back up again. Notice how it acted as resistance right here. Why does it do that? Because this is where most traders have their positions for the previous 4 hours. And anyone who bought up there and price went underneath there, it went 15, 18 pips against them. When it comes back up there, they're going to try to get out of their trade at break even. You wait for it to break out above that level before you get in right here, and you can save yourself a lot of unnecessary losses. Look at that explosive move. This stuff might appear magical, but in reality, all it's doing is looking at every single trade. We do hundreds of thousands of calculations to come up with these levels. They're real, unlike pivots and other support resistance areas, which do work. They're not really real. They're just some simple mathematical formula that, high, low, close, divide by 3 is a pivot. This is where most of the trades are at. And so it's very critical. When traders, let's say they're long up here at the highs, when it goes underneath there, they're losing money. It's likely to go down. It's likely to act as resistance. And now at this point, when it busts through here, everyone who was short up here at the high, expecting it to pull back, now they're losing money. Stops get hit. Buying happens. This is in the direction of the trend. It's above last week's value area high. It's not a coincidence that when major levels like this get broken, you have these big trends. Now, when it's this far above the upper value area, you don't want to really be buying up there at the high. You might want to wait for 38 to 50% pullback. It's just common sense. And that would be somewhere around 123.50 here, or even better, 123.34. So pulled back down to this area, you might have went long right here. You can see it shot up. And you obviously missed the trade here, and you probably would have lost here. You might have made a little bit here. But by waiting for, when it moves statistically too far, waiting for a bigger move, a bigger pullback before you go long is a good thing. And one of our systems we've taught for the last 5 years is the Elliott two-wave system. When the market moves up too far, Wait for it to pull back one wave, two waves, and look to buy somewhere between the first and second fib target. And you can see it just went 3 pips underneath there and shot up. So this is an oldie, but a goodie, and it's one of those types of trades that I look for on a daily basis whenever I can find it. Anytime a currency's gone up too far, it's way above, and one way of noticing when it's up too far, 30 to 50 pips above the previous 4-hour bar's value area is a pretty big move. It's going to need to pull back a little bit before people are willing to come back in there and buy. You bought this at 123.40, went up 30 pips. Keep in mind, 10 pips per day is all you need to double your account every 2 months. So this is almost half a week's profit right here on that move. This is an entire week's worth of profit. If you just traded this currency alone using our currency meter, the pound was strong, the yen was extremely weak, you had a good day. And if you took all the other good trades like the CAD yen buy, dollar yen buy, obviously the Australian got weak here, and the dollar was strong later in the day, so you could have sold the Australian dollar. Let's bring that up real quick. You can see, it fell. There's a lot of different ways of trading, especially with a new value area and soon to be released colored candles, which show the intensity in real time.